I'm Sharon Kreider for Western CPE. Thank you for joining us. I'm here with Karen Brosi. Karen Brosi is an enrolled agent and a certified financial planner in Palo Alto, California. And we're a team in teaching the federal and California tax updates at a city near you in California. Today we're going to ask Karen a little bit about tax Armageddon or whatever is coming up. With so many tax provisions that expired at the end of 2011, Karen, just tell us what we do as the end of the year approaches for our taxpayers and clients.
Well, I think this is certainly not unique, as we well know, but I think this is going to be a tough year-end planning year. And the reason primarily is just that. It's taxpayer uncertainty. And sure, others will talk about what will happen in 2013 relative to all the provisions that are expiring in 12. My immediate concern today is what do I advise relative to the uncertainty of the provisions that expired last year. And there's still time for Congress to act on that. And will we or won't we see an extender bill for some of those 2011 provisions before year end?
So if you had to speculate what's going to be extended, what's going to happen to the really big issues for our taxpayers?
Right. And so first of all, I think that we'll just have to suspend our disbelief for a minute, for some of us, and believe that there will be something out of the lame duck Congress before December 31st, 2012. So if we believe that, what do I think will be in it? Well, what I think will be in it is just the bare bones of the 2011 expiring provisions. The R&D credit, I think, might be in it. A couple of perhaps above-the-line deductions, tuition, teachers. But if I had to boil it down to what absolutely has to be in it, then I say two. I say the R&D credit for businesses, and I say the AMT patch, the extension of the higher exemption amount for AMT.
And then before year end, can you tell me what advice you'd give we tax practitioners for what to tell our clients about alternative minimum tax liabilities?
And that's the tough one, right? Because will it or won't it be extended? And that's the one where the real money is for our individual tax clients. The real tax money is for our individual tax clients, because the difference, the delta, as my engineer clients like to call it, between what was the exemption amount just last year and what it has fallen back to this year, just for a married couple filing a joint return, that's a $30,000 difference in the exemption amount for AMT. When you translate that at the AMT rate of 26 or 28%, that can be an $8,000 swing in their tax liability for this year, depending upon whether Congress acts or not. Now, tongue-in-cheek, I like to say, let's see. I run the return, I run the projection rather. I run the year-end tax projection up both ways. I look my client dead in the eye and I say, do you feel lucky? But that's not particularly helpful. So I think what I have to say to the client is, this is what the liability could potentially be. I believe that Congress, and probably most specifically Chair of Senate Finance, Senator Baucus, will not allow this one issue to stand. I believe they will fix it somehow, some way before the end of the year. And the reason is it's not just the tax liability number, that $8,000 extra that a married couple filing a joint return could suddenly find themselves taxed with, but I think it's the number of AMT payers, that if this patch doesn't get put in before year end, we'll go from about 3.5 million AMT payers nationwide last year to almost 30 million for this year. And that really is Taxageddon, or whatever it is that we're calling it these days. And I don't think they can stand the fallout from that. So specifically, I'm a tax practitioner. My client wants a year-end projection. I use my paid-for software to do that. It gives me an answer with this lower exemption amount, higher AMT. I figure out the difference, and most of the software today, by the way, is allowing me to put in some kind of adjustment that will say, if a patch occurs, what will the liability be? Because, of course, Congress has foisted this on us one too many times. So now the software developers have said, we'll help you with that by letting you check a box or put a number in to adjust for that. So I give my client then, I run it both ways, I give my clients the result, and then I think all it is about is keeping my clients safe. So if they can pay the lower amount and still be protected from underpayment penalties, then I don't recommend that they pay the higher amount. If they can't pay the lower amount and still be protected, if the patch doesn't come through, then I think I just have to disclose that to them. I have to say, here's your risk. Not only could your liability be this, but if you don't pay this, you could be subject to underpayment penalties. Now, when it comes to the AMT, I've got one more out on that, I think. And that is that for a taxpayer who's in AMT, they're not going to make that last final federal income tax estimated payment until January. And by then, we'll know whether it is or it isn't. So I think I still do the same process year-end through December, where I'm sort of wrangling all my clients to get them in for their year-end projections. I get them in, I run them, everybody knows what their two numbers are, and then I say, wait for it. And I will let you know before January 15th whether we got the patch or we didn't. And I think that's the way I'm going to handle it, this uncertainty for my clients yet one more time.
I think that'll make for a busy January, adding to our busy February, March, and April. So I'm Sharon Kreider for Western CPE. I'm here with Karen Brosi, giving us advice on alternative minimum tax. Karen and I teach the federal and California tax update. We welcome you to come to our classes and hear a lot more of the problems that go into the 2012 tax returns.